this means is that XRP is now a usable asset in a fully regulated futures clearinghouse. The combination of spot trading and derivatives under regulation creates a scenario where institutions can actually use XRP in ways they were not able to before. For example, banks, hedge funds, and large trading desks can now use XRP as margin in the same way they use cash or treasury bills. This opens up a new level of institutional participation in XRP. Now, let's talk about the strategic angle. Ripple isn't just pushing XRP, they're also promoting RLUSD, their USD-backed stablecoin, as part of the collateral stack in US markets. This is extremely important because it positions Ripple's ecosystem as more than just a payments network. It becomes a full-fledged infrastructure for regulated financing. By integrating XRP and RLUSD into CFTC-approved structures, Ripple is essentially creating a new plumbing for digital assets that can be trusted
play
by
tomorrow.
traders
No.
and institutional
Yeah.
investors. This
Can
is what
I?
people mean when they say
Sure.
Ripple is playing 4D chess while others are playing checkers. On top of this, the ETF landscape for XRP is heating up. Bitwise and other funds have launched XRP ETFs to give investors easy exposure to the asset. The market has shifted from seeing XRP as a risky, legally challenged asset to one that can now be fully integrated into regulated financial products. This is a major shift in narrative. Before, the SEC lawsuit against Ripple held back real-world adoption because no institution wanted to touch an asset under legal threat. Now that the lawsuit is over, XRP can finally be adopted, integrated, and used in real financial systems. The playing field is officially LL. Now that we've covered the massive news about XRP getting its first ever CFTC regulated status, let's dive deeper into what this actually means for institutional flows, market liquidity, and the overall price potential. Because if you're holding XRP or planning to, this part is crucial for understanding why things could change dramatically in the coming months. First, let's talk about institutional adoption. The fact that XRP is now listed under the CFTC framework means that large players, hedge funds, asset managers, and even traditional banks can now treat XRP as institutional grade collateral. This isn't just theory. This is how institutions normally use assets like US treasuries or blue chip stocks to post as margin and leverage trades. XRP being allowed in the same way is a fundamental shift. Previously, XRP was limited to speculative retail trading, and institutional investors were hesitant because of regulatory uncertainty. With this new framework, that barrier is gone. This could lead to a huge influx of institutional capital over time. Consider the role of XRP ETFs. Bitwise and other fund managers have launched ETFs giving investors direct exposure to XRP. These ETFs are not just tools for retail. They are mechanisms that absorb large volumes of XRP from the market, often locking coins into cold storage for weeks or months. What this does is effectively reduce the circulating supply available on exchanges. Combine this with growing institutional interest, and you have a classic case of supply pressure meeting rising demand. Economics 101. When demand rises and supply is constrained, prices generally go up. And in the case of XRP, this supply squeeze is happening before the broader public even fully realizes it, which is a key factor for potential price appreciation. Another important point is liquidity in regulated venues. With XRP being approved for margin trading under the CFTC, you now have a situation where liquidity can flow in regulated and transparent channels. This is significant because transparency reduces risk for institutions. When an asset is opaque or uncertain, professional players stay away. XRP's integration into regulated derivatives markets, physically settled futures, and options creates a safe and predictable ecosystem for large capital. Over time, this could encourage sophisticated hedging, basis trading, and structured products, all of which further strengthen XRP's position in the market. We also need to touch on Ripple's RLUSD stablecoin. Ripple is not just pushing XRP as a trading asset, they are pairing it with RLUSD in these regulated markets. This is huge because it bridges stable value with liquidity, making XRP even more attractive for institutions. Think of it as a two-part system. XRP provides bridge liquidity, and RLUSD provides stable collateral. Together, they create an institution-friendly ecosystem that could be used for trading, settlements, or even cross-border payments. This strategic move could make Ripple a serious contender for shaping how stablecoins are used professionally, beyond retail or payment applications. Let's also consider the global perspective. XRP isn't just moving in the US, it's advancing in Europe as well. Ripple's Euro-backed MECA-compliant stablecoin on the XRP ledger is now live on Swissboard, allowing users to buy in 15 fiat currencies. This is important because it demonstrates that XRP's ledger can handle regulated payments and tokenized assets in a real-world setting, not just theoretical use cases. Institutions like KPMG are auditing it, banks are backing it, and regulators are signing off. This positions XRP as a global payments and settlement infrastructure, not just a speculative crypto token. Another key consideration is market psychology and positioning. Many retail investors may still be hesitant, but institutional players are watching closely. They are positioning quietly, accumulating, and preparing for larger moves. This accumulation by smart money often precedes significant price appreciation. It's like a chessboard. While the casual trader sees small moves, the big players are setting up for a major strategic play. XRP's new regulatory status is the opening for that play. Finally, think about the timing and potential future flows. ETFs, institutional adoption, stablecoin integration, and regulated margin use all point to a coming phase of higher demand and reduced supply. This is a setup we rarely see in crypto, a combination of real-world adoption, regulatory clarity, and professional participation aligning simultaneously. XRP holders are in a unique position because these factors can compound over time, potentially leading to stronger price moves once wider awareness and liquidity flows kick in. Now that we've covered XRP's CFTC listing and how institutional adoption in ETFs could impact liquidity and demand, it's time to talk about XRP's role as a global bridge asset and why this is shaping it into a critical piece of the emerging digital financial ecosystem. This is where things get really interesting because we are moving beyond price speculation into real-world utility and strategic position. XRP has always been unique compared to other cryptocurrencies because it was designed to facilitate fast, low-cost cross-border payments. Unlike Bitcoin, which is primarily seen as digital gold or a store of value, XRP's ledger allows instant settlement between different currencies, making it a natural bridge asset. With the new regulatory clarity in the US, XRP can now operate in institutional-grade infrastructure, which means it could be used to move value between banks, clearinghouses, and exchanges globally. Think about it. The financial world operates 24/5 across multiple time zones with a constant need for liquidity. XRP fits perfectly as a liquid, fast-settling asset that can connect these fragmented systems efficiently. Let's look at how this works in practice. With projects like the DTCC pilot and Ripple's integration strategies, XRP could serve as the intermediate asset that connects tokenized securities, digital cash, CBDCs, and stablecoins. Currently, many financial systems are siloed. Each bank or market has its own ledger, its own rules, and its own timing for settlements.
พร้อมใหม่ที่จะอัพเวลไม่อีกคันเริ่มจาก Green Miles ยิ่งเติมยิ่งอัพเวลเติมเยอะก็อัพเวลเป็น Green Miles Pro เติมพรีเมียมอัพเวลเป็น Green Miles Premium ยิ่งเติมยิ่งอัพเวลจะพิเศษแบบไหนมาอัพไปพร้อมกันเริ่มจาก Green Miles
มาแล้วครับรีวิวท็อปเปอร์แก้ปวดหลังตัวดังในโซเชียลตัวนี้พี่เจมส์ได้มาครับเป็นท็อปเปอร์จากแบรนด์โชวาครับและที่ตัดสินใจซื้อได้แบบไม่ลังเลเพราะว่าตอนนี้เขามีส่วนลดแล้วนะเข้าเว็บไซต์แล้วก็ใส่โค้ดเลยและอีกอย่างครับเจมส์ชอบตรงที่เขาแพ็คมาแบบสุญญากาศครับแกะออกมาก็จะใหญ่ปึ๊บแบบนี้เลยพอเอาไปวางไว้บนที่นอนคือดูนุ่มน่านอนมากวัสดุเขาเป็นไฮเปอร์เมมโมรี่โฟมแถมตัวของแถมหุ้มด้วยแอร์เทคครับนอกจากนี้แล้วก็ระบายความร้อนได้ดีนะครับเขายังช่วยแก้ปวดหลังได้
Moving funds between them often takes time and involves multiple layers of intermediaries. XRP acts as a bridge currency, allowing instant settlement between these different networks. This is not just theory, it's already being tested in live pilots with US equities, tokenized bank money, and even cross-border flows. Another key point is that XRP is highly liquid, which is essential for bridging values. In the financial world, if you want to move millions or billions of dollars between markets, you need an asset that can absorb large trades without causing massive price swings. XRP's liquidity in regulated venues, combined with its CFTC-approved margin use, positions it as the most viable digital bridge asset globally. Institutions can now use XRP to manage liquidity between time zones, currencies, and regulatory environments while maintaining transparency and control. This is a level of utility few other cryptos can offer. We also need to consider Ripple's strategic role. Ripple isn't just focusing on XRP token. They are actively positioning RLUSD and other stablecoins alongside XRP in regulated markets, both in the US and Europe. This creates a complete ecosystem where XRP provides bridge liquidity and RLUSD provides stable collateral for trading and settlement. European adoption through MiCA-compliant Euro stablecoins strengthens this ecosystem further. Banks and institutions in Europe now have a regulated way to use XRP and RLUSD in real-world financial operations. XRP now usable as collateral in CFTC-regulated futures and options, we are seeing XRP enter spaces that were previously reserved for traditional assets like treasuries or top-tier securities. This changes how institutions can leverage XRP. They can now post it as collateral for leveraged trades, hedge positions, and even participate in structured products. Over time, this could lead to wider adoption by professional market participants, which creates a feedback loop. More adoption, higher demand, stronger market confidence, further adoption. Let's also discuss price discovery and transparency. When XRP trades in regulated venues with spot, futures, and options, it creates a transparent market where price is discoverable and reliable. This is important for institutional players who need trust in market data before deploying large amounts of capital. Reliable pricing reduces risk, which encourages more institutions to enter the market. This is why the combination of CFTC approval, ETF accumulation, and regulated trading venues is so important. It's not just hype, it's infrastructure that supports long-term growth. Finally, think about the broader narrative. XRP is no longer just a token that people buy for speculation. It is now positioned as a critical part of global financial plumbing, a bridge between traditional finance, tokenized assets, stablecoins, and cross-border payments. Its new regulatory status and integration into real-world applications in the US and Europe signal that XRP could play an indispensable role in the evolving digital financial ecosystem. Early holders are not just speculating, they are potentially holding ears. Let's talk about human behavior in crypto markets. Cryptocurrency traders and investors are highly reactive to news, trends, and market sentiment. When something like XRP getting CFTC approval happens, it's a huge confidence signal. Confidence drives action. Institutions see this as regulatory clarity, retail investors see it as validation, and media attention increases exposure. These reactions don't happen evenly. They start small, then ripple out, causing a multiplier effect. This is exactly what we are seeing with XRP. Early adopters are accumulating quietly, while mainstream attention is still catching up, creating a perfect setup for upward momentum. Accumulation patterns are also critical here. ETFs and institutional buyers are locking up XRP into cold storage, which removes it from circulation. Large quantities of XRP are being held by funds like Bitwise and other institutional players, creating a supply squeeze. Less XRP on the open market, combined with increasing demand from both retail and institutional participants, typically leads to price pressure upward. This is classic market behavior. When supply is constrained and demand rises, price tends to react accordingly. Early holders who recognize these patterns can take advantage of these trends strategically. Another important factor is sentiment around regulatory clarity. For years, XRP was held back by the SEC lawsuit, and many investors were cautious. That caution is now turning into optimism because the lawsuit has been resolved, and Ripple is actively integrating XRP into regulated trading and collateral systems. Human psychology plays a major role here. When people perceive reduced risk and higher legitimacy, they are more willing to commit capital. This isn't just theory. Market data shows that ETF inflows and institutional participation are already increasing steadily. The market is responding to real-world credibility, not just hype. We also need to consider the FOMO effect, fear of missing out. In crypto, once a high-profile news cycle hits, retail and institutional investors start reacting quickly. When large funds announce ETFs or when platforms like Bitnomio start accepting XRP as margin, smaller investors notice, and they begin to accumulate as well. This creates a feedback loop. More buyers drive demand, which attracts more buyers, and liquidity becomes concentrated. Early awareness in this phase can be very advantageous. Let's not forget global adoption psychology. XRP's movement into Europe with MECA-compliant Euro stablecoins, integration with Swissborg, and the acceptance of RLUSD stablecoins shows that adoption isn't limited to the US. As international institutions see XRP being used in real-world regulated applications, confidence builds globally. Human behavior in finance often mirrors what is happening in other regions. If a regulated framework works in the US, European and Asian markets are likely to follow and adopt similar models. This increases the network effect of XRP as a bridge and settlement asset. Another psychological factor is trust in infrastructure. Professional investors and institutions prefer assets that are transparent, auditable, and supported by regulation. XRP's integration with regulated exchanges, derivatives markets, and collateral frameworks gives it a trust edge over other cryptocurrencies. This trust encourages long-term holding rather than short-term speculation, which stabilizes markets and allows for more predictable accumulation patterns. Finally, consider timing and scarcity. The inflows into XRP ETFs, CFTC-approved futures, and institutional adoption are creating limited availability on exchanges. With high demand, decreasing circulating supply, and increasing global adoption, the setup is ideal for a potential supply shock. Historically, these types of market dynamics lead to strong upward price movements. But here's the key. Being patient and understanding the macro picture allows you to participate without panic, taking advantage of the underlying trends rather than chasing headlines. First, let's talk about future adoption in financial infrastructure. XRP is no longer just a speculative asset. It is evolving into a core component of regulated financial systems, with its integration into CFTC-approved futures, options, and collateral frameworks. XRP has become a trusted tool for institutional liquidity management. This is significant